You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, a program where we break down everything going on the other side of the fence, the futures options side of the fence. Maybe we'll talk some energy. Maybe we'll talk some ag, some equities, some metals. You never know what's going to make it onto the show every week. That's why you got to tune in. My name is Mark Longo from theoptionsinsider.com, as well as, of course, on this fine network. Glad to see so many of you have been joining us and discovering the network over the past few months. Keep that influx of new listeners coming. We love to see all of that. So wherever you're listening to this, make sure you leave a review out there so other folks can continue to discover this crazy program and indeed this fun network in these crazy, turbulent, tumultuous markets that we find ourselves in today. And keep those questions coming. We know you have a lot of them. We'll endeavor to answer as many as we can here on the program today. And joining me to help me do just that, first off, holding down the FTSE hot seat, my cohort, my partner in crime, a.k.a. the Managing Director of Derivatives Licensing over there at FTSE Russell, Mr. Sean Smith. Sean, welcome back to TWIFO, sir. It has been too long, almost exactly a week.
It's great to be back. It's always good to be on the show, Mark, and looking forward to having a fantastic discussion today. Really looking forward to it.
Yeah, I'm looking forward to it, too, because also holding down the CME Group hot seat today, old friend of the program, hasn't been on in a little bit. He's Mr. Derek Sammann, the Senior Managing Director, easy for me to say, Global Head of Commodities and Options Products over there at CME Group, a.k.a. the guy who oversees all the options over there. Derek, welcome back to TWIFO, sir. It has definitely been too long for you.
Thanks, Mark. Great to hear your voice. Always great to be on the program. Sean, always good to reconnect with you, my friend.
Well, Derek, I'm not sure if you saw it, but a lot has happened since the last time you've been on the program with us. The world pretty much fell apart. Then it seemed like it was doing better again, kind of falling apart again right now as we speak. A lot of tumult out there in the market. So before we dive into some other stuff, just catch us up. What's it been like for you as the guy who's kind of been overseeing all things options at CME as we saw the madness unfold going into March, limit down every day, then the almost equally mad ascent back up to the level we are right now. So we saw things like pandemic, we saw civil unrest, we saw negative options. I mean, all sorts of crazy things have unfolded since the last time we chatted, Derek. So give our listeners a little bit of a glimpse of what's it been like for you over these past few months.
Not enough hours in a day, I'll tell you that. This has been, we all want to see volatility and healthy levels of volatility. We've had that in spades over the last 4 months, and I think we're feeling pretty good about going into February, and then all of a sudden things started to go a little bit crazy with the pandemic, and that just has bred a whole different set of issues. Really had a huge impact on volatility and uncertainty. And listen, derivatives this is what we're built to do. We're built for markets exactly like these, where there's a great deal of uncertainty, where the next, where the next 1,000 points in the Dow is, where the next $8 in oil in, where the next, 8 points in VIX is. Today's a great example to be talking to volatility. It's almost emblematic of what we've seen this year. But short answer, Mark, it's been a phenomenal year. Our year-to-date volumes through end of May are up 13%. And, despite the fact that equities has really been, a significant story this year, equities is only our third fastest options asset class this year. Our metals business is up 53% year to date. Our energy business up 43% year to date, and equities up 38%. So we're seeing good, healthy, strong growth across the asset classes that really have seen the bulk of the volatility, and frankly, the volatility of volatility moves over the course of the year. Really happy to see that not only the business growing healthily globally, while we're up 13% across the board on a global basis, our non-U.S. business continues to be setting the pace of growth. Our European business is up 48%, doing almost 800,000 contracts during the European trading day, which is a significant sum. That's as much contracts in total that we were trading in aggregate probably just about 6 or 7 years ago. So we're doing close to just about 4.5 million contracts year to date on an average daily volume basis. Open interest is up a little bit from year end, which is great to see. So we're seeing very much a risk-on environment across the board. And as I said, the bulk of the volume growth surprises a little bit of folks is on the metals and energy side, followed closely by equity. So it's a great time to be running a franchise that's got the benchmark asset class coverage on the options across the board. And we're certainly seeing our customers react well and use all of our products across the board to manage what is an unbelievably volatile market right now.
Yeah, Derek, those numbers would be impressive, I think, in any normal scenario where CME was operating as normal, but these are clearly not normal times. Every time you come on here, you mention a lot of the non-U.S. hours. You also mention what percentage is going up on Globex, and right now for the last few months, that's been effectively 100%. Who would have imagined? I certainly wouldn't have, that we would see volume like this, numbers like this, and all of it effectively being transacted on an electronic platform, effectively on Globex. Are you as surprised as I am, Derek, that we've been able to see the numbers we have despite the fact that it's been effectively an unprecedented electronic environment for the last few months?
Well, yes and no. I would say, remember, Mark, we spent a lot of time and a lot of work innovating our technology, adding functionality, capabilities, building our front-end CME Direct, working with our collective best friend, Nick Howard, and QuickStrike, and embedding all of those terrific QuickStrike tools and analytics up inside of CME Direct to draw more folks to our front end and to be able to execute electronically. Every single asset class, including fixed income, going up to March 13th, the last day that we had the trading floor open before we closed for COVID, every one of those asset classes was continuing to expand the percent of business trading electronically. Just to kind of level set, the E-mini options, as you know, are only electronic. So that was already about the aggregate of the options complex, and equities was already about 97% electronic. FX was already at 99%. We had ags already in the low 80%, metals also in the low 80%. Treasury options close to 80% electronic. Eurodollars was kind of 51 or 52% still trading on the floor, but trending lower. So the work that we had done and the pace of growth on the box has not surprised. It was actually very encouraging to see all the work that we had done to set up our front end, our technology, the ease with which customers that maybe had only been traded on the floor could rapidly sign on to CME Direct and get access to the electronic platform for being able to transact off the floor was as seamless as possible. We actually saw the floor-based Eurodollar options business go from about 1 million contracts and in aggregate about 2.7 million contracts overall actually stay static or even grow a little bit. So we don't feel like we lost business during the time that the floor has not been an available execution venue. We do feel that the work we have done and the investments we've made in the front end has made that transition more seamless for people. That said, we did just announce late last week that we are going to be aiming to reconfigure the euro-dollar options pit and look for a reopening date of August 10th is what we're shooting for right now. At this point, all other trading, open outcry trading pits will stay closed until we have the phase 5 reopening order from the state. But until then, we're working on the basis for the best possible way to find socially distanced capabilities for the euro-dollar options traders in about mid-August or so. And, between now and then, we're just continuing to see business continue to grow, I think, very comfortably on our own front end, CME Direct, other ISCs front ends, and that business grow across asset class. So the answer is yes and no. You hope for the best and plan for the worst, and I think this is a great example of that having been the case and the business being able to transition with customer need and serve that customer base through what's been a pretty unprecedented amount of volatility and change.
Unprecedented indeed. Well, you kind of just touched on it, Derek. You guys made a lot of news this week when you announced you finally have a date for the return of the floor, at least the return of the Eurodollar pit, which is, of course, the big dog, the one everyone's been asking us about. Obviously, a lot of the complex paper goes up in Eurodollars as well as, of course, in the S&P. Walk us through really quickly, because I know we're coming up against it really quickly, how you guys made that decision to only focus on the Eurodollars for now as opposed to something like the S&P that also have complex flow, and how you decided on this date of August 10th.
Yeah, well, I think that we've needed to pay focused attention to what is keeping social distance requirements across all the folks in that pit. As you know, the Eurodollar options pit is the single largest pit that we have. So being able to accommodate social distancing that many people, it means that that's the group that we can accommodate. So it's also the market that's got the most amount of business that pre-close of the floor back on March 13th or closure on March 16th was the market that still had over 50% of that business trading on the floor. So we're focusing on the biggest first, where we can safely accommodate the appropriate social distancing physical measures on the floor to accommodate that group. So that's how we landed on that particular piece going forward.
Well, I've been monopolizing you here, Derek, but I know my cohort here, Mr. Sean Smith, is champing at the bit to get in here. What do you have for Derek, Sean?
I wanted to just respond to Derek when you first started speaking, Derek. It's a real pleasure to reconnect with you, too. I don't think we've touched base since we've gone away from the office and working remotely. So I wanted to say hello and hope and pray you're healthy and everything is well with you. But again, I also wanted to congratulate you. And when I say congratulate you, I mean you, CME Group, on just incredible milestones in growing various products, including the equity suite of products. And of course, I'm very passionate about our FTSE Russell business that we partner with you guys. We're just very excited about volumes and open interest and the incredible successful launch of the micros, and particularly the Russell 2000 micros have just done incredibly well. And just a congratulations across the board, and very excited to see the Eurodollar options pit open back up again. As Mark has mentioned, it's a constant question every single show. When are the options pit at CME going to open? And makes all the sense in the world to me that from a social distancing point, you bring in the biggest product and you make the place logistical so that people stay safe, which I know is obviously a paramount reason behind all the logistics to create such an environment. So best of luck with that, and it's just it's fantastic to hear your voice. So I'm glad to have you on the show with us.
Thanks, Sean. It's great to catch up as well. It seems like both yesterday, but about 9 years ago since we physically saw each other. But I know we're going to be getting back to it soon at some point. So look forward to whatever our new normal looks like. Right now, I'm talking to you from my living room and sitting here, and let's just say I'm not in the coat and tie right now. So we're dressing down has its advantages.
There are some positives to a global pandemic. Well, I know we have to cut you loose here, Mr. Derek, so let's leave it on this. I know a lot of our listeners would like some insight into what's going on from an overall CME options perspective. You guys have a lot of irons in the various fire. I'd be curious for you, as you've been managing all of this madness and this maelstrom over the past few months, the sell-offs, the rallies, the pandemic, the unrest, now, of course, the big sell-off yet again. what to you really stands out as maybe the biggest takeaway, the biggest surprise? You thought, hey, I really didn't expect that. I'll give you one. My biggest surprise over the past few months has certainly been WTI trending negative and all of the things we've seen develop out of that, the analysis, the research, the discussion points. That certainly, it continues. People still hit us up about that. So I'm curious for you, leave our audience, what was the biggest perhaps surprise or maybe head-scratching moment for you and the team over the past few months?
Well, I'll say two things. A lot of people, always, particularly in the options world, tend to, hope for a lot of volatility. And sometimes you be careful what you wish for. And you get these massive bouts of volatility. You saw WTI volatility go from kind of the high 30, low 40% ratio up to about 160%. And you're starting to tread on territories where too much volatility starts to scare people and you start to see people pulling back a little bit. What really surprised me and encouraged me was the consistency of liquidity provision across all of our asset classes in options, particularly in times of significant market stress. We also saw, not surprisingly, a lot of the market retrenched back into the benchmarks where they know they've got reliable, deep liquidity in electronically accessible format. So, it's validated much of the investment that we have made, the investments we continue to make in our infrastructure, in our robustness, in our stability of systems. So when the stuff is, hitting the proverbial fan, customers know that they can get access to the market data they need, the trading access and the pools of liquidity they need 23 and a half hours a day, no matter where they are in the world, no matter what event is buffeting their world. That actionable liquidity, and particularly on screen, I think has proven that this is a place that in times of stress, people are going to retrench to. So I'm very happy about that. The other piece is, you touched on a little bit, certainly the day that we saw crude trade negative was equally surprising to me, that we also saw a significant move in the gold market. We've seen the physical commodities, particularly energy, and specifically our WTI contract and gold specifically in metals, be two of the most active options contracts we've got really in those two. And I mentioned before, the numbers I think surprised a lot of people. There's an expectation that, with equities leading the charge overall in volume, that would also be the fastest growth driver on the options side. But as I said, fastest growing for us is metals, followed by energy. And you saw two pretty significant moves in both of those asset classes, both up and down. Not only did you see WTI trade from 20 down to 15, briefly down to negative on April 20th, then back up and trading up to 40, and now we're back in the low 30s with it selling off again today. There's no trending market right now in the physical commodity space, and I think that's been both good for traders that were anticipating that, and I think it's been really encouraging to see the amount of stability in participation and robustness, particularly from the market making community. A lot of folks think that when volatility hits in significant bouts, that you see some of that price provision step back. It's been anything but. That price provision across our asset classes in the market making community to ensure robust, executable two-way prices in everything from equities to FX to fixed income to metals continues to be there. So some positive surprises, a couple of head scratchers in terms of trying to understand some of these moves, but that's not my job, man. My job is to make sure that we've got the right products and the right platform delivered in the wrappers that our customers need, so that we can continue to grow this terrific business and provide those global risk management tools that help people manage their business and make a living in this crazy world.
Well, Derek, Sean and I have to keep on rolling with the movers and shakers and all the other fun stuff of the show. I'm glad we can get you on for a little bit here at the top of the show. We'll have to do it again, A, more frequently than whatever it's been the last 6 months or so. And then B, hopefully the next time you come on, there haven't been as many surprises in between your visits. Let's put it that way.
That sounds good. Thanks, Mark. I appreciate it. Sean, look forward to catching up over beer at some point.
Sounds good. Take care.
All right. Take care, fellas.
All right, there he goes over there as we head on into the big movers and shakers. A lot, as you might imagine, moving and shaking, a lot moving and shaking even today. So this number is changing as we speak out here, listeners. But Sean, you know what I'm going to ask you next. You probably can just answer it off the top of your head. Where should we begin our journey this week, sir?
With all these red numbers today, I got to go upside.
How did I know? I already have it queued up. How did I know that you were going to go that way? And you're right. We are seeing a lot of red today, at least on the broad equity side of the space. S&P now over 5% to the downside, about 5.25%. Dow closing in on off 6%. NASDAQ was about 3 2/3 as of our last show. Now it's up about a full percent from there, about 4 2/3. So this sell-off exacerbating. Crude taking a bit on the chin too. We'll get to that in a little bit. But let's look now back over the course of the past week. This was as of the start of the show. It probably has changed even since then, but you gotta draw that snapshot somewhere. Let's start on the light side. Number 5 to the upside. So the least mover on the upside this week was the yen dollar at up about almost 2.5%. Number 4, lean hogs up about 2.8%. Number 3, the old Ultra Bond up about almost 3.5%, about 3.44%. Then numero dos, we got copper. Don't see copper on the list too often. Copper up nearly 5%, about 4.7%. And the euro dollar is taking the top spot out there, up 4.84%. Maybe the news, not even a rumor anymore, the news that they're coming back in a physical form, as we just heard Derek confirm at the top of the show there. Maybe that leading to a little bit of joy out there on the trading crowd. Let's go to the dark side out here. And now let's go rough rice land. Rough week yet again for rough rice, off nearly 5%, 4.9% to be precise. Number 4, KC wheat. Rough time here on the ags this week. KC wheat off 5 and about 1/3%. Number 3, some little product, I'm not familiar with this one, Russell 2000, I don't know what that one is. 2,000 of something, I think it's 2,000 hogs. They get together and they weigh them, they take an average. Whatever it is, it's off nearly 5.5% this week. Once again, small caps leading the dance to the downside, pretty much. Almost leading the dance, I should say, because it got edged ever so slightly by the only other equity that really keeps pace with it, and that's the S&P Mid-Cap 400. It's not an index anyone really talks about or tracks or really utilizes to any capacity, yet it's off about 5.5%. And there probably is something to that these days, because we've been saying for a while now in the S&P land that it's really the S&P 6. It's the top names. It's your Facebooks, your Amazons, your Apples, all these names that are up there that are just dominating the kind of top, tech-heavy top of S&P. Take those out, and you really don't have a lot left. And that's kind of what the S&P mid-cap is. It's taking those out. So it kind of makes it maybe a little bit more interesting, maybe a little bit more insightful to what's actually going on in the economy, rather what's going on with a handful of giant tech names out there. Number 1 to the dark side this week, oats, off 9.5%. Now, before you got up in arms and say, hey, let's talk oats this week, did a little digging before showtime, and there was a whopping 20 contracts traded on oats this week from an options perspective. So unfortunately, not a lot of options nuggets to sink our teeth into. But we got to start equities today, Sean, because that's really what's leading the dance out here. Coming into showtimes, this has probably changed even in the last few minutes. In fact, let's see if we could get an updated quote out there. Yeah, it has, because VIX, as of not too long ago, was about a little bit shy of 33. When we first broke this down. So that put it up about 7.5 points from our last show. As of right now, it's at about a 37. It puts it up another about 4 handles, or up over 11 handles, 11.5 handles from this time last show. So a big move out there in VIX land. Obviously, RVX moving a little bit as well. Coming into showtime, it was at about a 45.5. I'm going to go out on a limb and say that's probably a little bit higher now. And yeah, it's 47, a little bit north of 47, about 47.1 out there. So that puts that up about 12 points on the week. So a big one. That spread actually tightening up a little bit. It was about 12 points coming into not that far before the show. Now it's at about almost exactly 10 points. So pretty much almost exactly as wide as it was last week, which is kind of interesting. But Sean, you guys have kicked it off. You obviously have the big recon that happened last week. It started happening with the naming day last week on the 5th. You have more dates coming up. And also we have this just completely just crazy sell-off going on out there right now today. It seems like all these concerns that have built up in the equity market since mid-March when we started this V-shaped rally are all playing themselves out right now. So what are your thoughts on what we're seeing out there from a sell-off perspective, what you're hearing anecdotally from the clients and people you're talking to as all this madness and volatility unfolds, and also what do you got in store for us on the recon front, sir? A lot to unpack there.
Well, it's an incredibly volatile day. Volatility is popping again, and I'm sure when we discuss the VIX RVX spread later in the show, we'll see quite an increase there in that spread. It is it's an incredibly strong to the downside day, and of course, as we talk about small caps, the Russell 2000 is it outperforms to the upside, and it also accelerates to the downside. And I think the last number I saw was down 6 or so percent, a little more than the numbers we discussed earlier in the show. But recon is happening, and we had additions and deletions occur on Friday, and we have that the small cap and large cap, the Russell 1000 and the Russell 2000, creating the benchmark of the Russell 3000. The list has 143 projected additions and 205 or so projected deletions. But again, these are preliminary numbers based on our numbers from June 5th. Interesting note is technology still dominates the large caps, with three of them topping over $1 trillion in market cap, those being Microsoft, Apple, and Amazon. And another interesting note is the smallest company in the Russell 3000, the cap is below 100 million. So there's quite a range in market cap between the smallest capitalized stock and the largest, right? So it's really interesting dynamics and really interesting times for these for the Russell 3000 complex. You have to watch the Russell family as it realigns, because the methodology really does a fantastic job of keeping the indexes relevant to the U.S. economy and representation of these indexes. And there's over $9 trillion in investor assets benchmarked to these Russell U.S. indexes. And this reconstitution that happens once a year, we expect record volumes with this rebalance this year, of which happens at the New York Stock Exchange and on NASDAQ as well. So we're very excited about the volumes, and June 26th is going to be an exciting day, and those you'll see all of the stocks in the index and performing on Monday, June 29th. So very, very exciting times coming up.
Exciting times indeed. Let's break it down right now. Looks like some big paper going up out there in the Russell 2000 right now. We've been saying for a while, Sean, that it seems like pretty far out of the money puts seem to be dominating the tape, and that appears to be the case again this week. Coming into Showtime, or actually coming in as of a few minutes ago, by the way, I forgot to mention at the top of the show, there's so much to pack in there, cmegroup.com/TWIFO, TWIFO. If that doesn't work for some reason, listeners, TWIO will work. So both of those should work. Sometimes one or the other doesn't, but TWIO always seems to work as well. That's this week in options. They forget the F sometimes. Either way, both of those should work. Get you these reports we're talking about right now. Coming into, actually as of a few minutes ago, Russell was at about 1354.30. That puts it up, about 8% net on the week, even with this crazy sell-off we're seeing out there today. Today, not a good day, but net, it's been a interesting. Again, that's just for the last few sessions. That's not for, still last show. That's a different scan we run at the top of the show. But right now, despite the fact that we're at around a 13 double or so, it's far out of the money puts, Sean. It's 9 double puts in June and 965 puts in July that are dominating the tape, about 1,470 of each. So they line up pretty close. So I'm going to go out on a limb and say that's probably a roll. When I dig into the 9 double puts, it seems like that is the case. Someone closed out about 1,470 of those on Wednesday. Exact same day, we saw about 1,470 of them going up out there in July. So they got a little bit tighter, 10 points closer to the at-the money. When you're talking that many handles out of the money, I'm not sure if 10 handles really means much, but they did. So they rolled, sounds like, Sean. So they're keeping this, I guess you can call it a weird hedge. It could be a premium harvest, but it seems like it might be a hedge out there. Again, we don't have a side on this. I'll have to dig in a little bit longer. Does this surprise you, Sean, that it's still these far out-of-the-money puts that are still dominating the tape for thousands of contracts here this week in the Russell 2000, sir?
Not at all. This is, I would call definitely a hedge, but also, we get that question all the time, you and I. Is it a hedge or is it harvesting? And the answer is yes, because of this. You find the skew in the downside puts pretty rich with the Russell 2000. So you have both. You have someone very interested in having some extreme downside protection, which is always good to protect investors, and you have an opportunity to capture some risk premium. So there's definitely the appetite and the desire to harvest volatility. So I think you've got both sides of that trade there.
There's an appetite for ags, certainly at least to the downside this week. So let's go a little bit of ags land. Don't get in there too often because they haven't been popping off too much, but they are this week. Number one to the dark side was oats, off nearly 10%. Unfortunately, oats did a whopping 20 contracts this week, so not really a big option story for us to sink our teeth into there. If you're wondering, S&P Midcap 400, by the way, 0 options contracts, no options on that. So no option story to parse there either. Obviously, Russell 2000, we just did. Let's go out to the wheat. A KC wheat, that gets into the back and forth between KC wheat, which this week did about 18,000 contracts. Decent paper. Then, of course, SRW wheat, a.k.a. soft red winter wheat, a.k.a. Chicago wheat. That's where the action really is on the wheat land, 111,000 contracts. So even though SRW wheat not exactly moving as much as KC wheat, there's more options flow to parse. I think we're going to hang our hat there. Coming into showtime, we're seeing this week at least, SRW wheat is up nearly 2%, 1.7%, right around the 509 handle, listeners, if you don't follow wheat too closely out there. Most of the paper coming in this July contract that has about 34, almost 35 days to go. And looks like the big trade is the 520 calls. So about $11 out of the money calls, going up nearly 7,000 times out here. The big print actually on Monday, 2,100 on Monday, about 2,000 on Wednesday, 2,000 on Tuesday, 1,300 on Wednesday. The rest kind of scattered throughout the week. Good chunk of that opening. So a lot of opening upside. Maybe some folks thinking this, at least recent rally we're seeing out here, has some legs. Net on the week, again, KC wheat off a little bit. So kind of a bit, maybe thinking that sell-off overdone. Want to load back up. Either way, calls leading the dance out here this week. Let's get to the SKEW really quickly, too. Just want to maybe throw in some other complexes out here as well. The puts, looks like the puts haven't really changed too much. The puts were 0.4% cheap to the at-the-money last week. This week, 0.6% rich. So I guess about a point swing, getting a little bit bid out here, but not a ton. Really, as you mentioned, it was the calls. The calls had all the action last week. They had 3.1% bid to the at-the-money, so a slight bias to the calls last week. This week, the calls and the puts are almost, actually, they are literally symmetrical. They're 0.6 rich on the puts, 0.6 rich on the calls. That means we got a nice smile out there in front month, at least out there in I almost said KC wheat, in Chicago wheat. Which means the market kind of a bit of a coin flip right now as to where we're going out there, which is always kind of interesting. You don't see that in the equities or other products too often. So when we see these nice bits of symmetry lining up, they always are kind of interesting. Vol up a little bit as well, up about 1.3. Gets us up a little bit north of 27 out there from an implied vol in the wheat out here. Let's keep rolling with, let's see, a lot of interesting names lighting up our movers and shakers this week. Rough rice, same deal, unfortunately, listeners, 307 contracts. So not a lot to parse. Tell you what, really quickly, let's look at KC wheat and see if we see anything interesting. Again, it's only 18,000 contracts, not a ton to parse out there. Let's see, coming into showtime, the big contracts out here. And again, a bit of a different story. SRW wheat, Chicago wheat up, KC wheat off. So a little bit different deal. The big print out here is 1,700 of the 500 contracts, 500 even. 500 strike contract. By the way, if you're wondering, KC wheat at 444.5 right now. Vol up a little bit out there. SKEW puts were about 1.2% cheap last week. This week they're about 1.7%. So puts a little bit, not much. And the calls have come in about a point. They're about 5.7% rich this week, about 4.6%. So not a ton of action out here. Again, not a ton of paper in KC wheat with these 500 even strike calls leading the tape out here this week. Let's just look really quickly. Yeah, the big days were Monday and Wednesday, 570 odd each of those days. Slightly biased towards opening, but seemed like a lot of back and forth on that strike, quite frankly. So again, not a lot of paper to parse, unfortunately. That's also the case with copper, number 2 mover to the upside at about 1,100 total contracts here on the week. So let's do it, Sean, because we're just talking Eurodollars at the top of the show. Let's go to the big dog. Let's go to the big one. If you want to find it for yourselves, listeners, go into rates and the drop-down U.S. rates, Eurodollars right there at the top of the list. It'll be very interesting, Sean. The listeners have been asking us for a while, what do we think is going to happen when the pit comes back? Now we'll have some concrete data coming up as of August 10th. We'll know for sure. Very interesting that they chose to focus just on the Eurodollar pit. Obviously, that's the big dog over there. You can make an argument probably for the S&P as well. SIBO is bringing back the SPX, so I'm guessing CME will probably want to bring back the S&P pit in some capacity next, but the big dog's got to go first, and that is the Eurodollars coming into showtime right now. We mentioned, as of last show, we were up quite a bit in the Eurodollars, up nearly 5%. As of right now, we're seeing it effectively unched, 99.68 or so out there for those of you who don't watch Eurodollars too often. Again, the paper out here is pretty astronomical compared to what we're talking, 200-odd contracts, 18,000 for KC wheat, 1,100 for copper. We're at 2.75 million right now for the week in Eurodollars. That's actually kind of light, listeners, so that shows how much paper we got going up out here. The big month, or I should say contract to go, is the June contract that has about 23 and a half days left, doing almost 20% of the paper, 19.5%. Seems like the big trade out here this week, Sean, kind of lining up with where we are in the underlying pretty nicely. We're at about 99.68, 99 and three-quarter calls, leading the dance with 191,000 contracts. Yes, I said that right, listeners. 191,000 contracts just in this one call contract out here. $1.21 in the 98, 98 and 7/8, and we kind of go down from there. So a lot of paper lighting it up. We'll stay at these 99 and three-quarters for a second. The big day was actually today. 98,000 contracts. Kind of interesting. You know, we saw the Fed do their dance earlier this week. So a lot of interesting stuff going on in all things Eurodollars. Mr. Sean, let's get to, I think we probably should do a little bit of crude. What do you think, sir?
I couldn't agree more. Let's talk crude.
All right. We won't be crude, listeners. I can't speak for Sean. You never know with him. But coming into showtime, again, we saw WTI. Actually, a rare week where energy was not on the biggest movers and the shakers out there, listeners, which is kind of interesting. But overall volume, pretty active week out here. Yet again, WTI, 411,000 contracts. So despite the fact that net movement hasn't happened, of course, at about 33 and a quarter out there in the old WTI contract right now. Vol is actually off on the week, which is kind of interesting, given all that's going on out here. I'll make sure some of this data is coming through correctly out here, listeners, because some of this is kind of interesting, but we'll parse what we can. Maybe a little bit of a hiccup here with some of these analytics here. But let's see what we can parse out here. Again, coming to showtime right about 33 and a quarter. Seeing front month vol kind of up. The rest of the vol actually off a little bit out here. Looking at where the big positions are, over 51% of the paper in this July contract, so it's still front month. That's still where the action is, which is not surprising. Everyone was worried, would we see a repeat of what we saw in May with the front month going negative out there in June? So far, it didn't happen. It doesn't seem like July is trending that way, at least anytime soon. 30 puts, though, are where the action is. Listeners, nearly 16,000 contracts. The lion's share going up. Looks like today, about 5,300 contracts. Again, 30 puts seem to be where the action is. Nonetheless, going on out here. Let's see if we can find some funky prints. 25 puts doing a fair amount of volume out there in August with about 10,000 total contracts out there. So if you like some weird strikes, 25 puts, kind of where the action is. Let's parse the SKEW really quickly. Last week in this July contract, we saw the puts were really rich, 14.1% rich. This week, they're at about 7%. So they've come in pretty much about half in terms of the bid to the puts. So interesting stuff out there. Calls were about 11.6% cheap last week. This week, 9.8% cheap. So we've got a little bit of a bid, not much, a little bit of a bid out there. So they're still cheap. That's effectively. So the calls not getting perhaps the bid or the love or the hope that some folks out there, I know who are on the crude bull side, were hoping they would have. Of course, today's not a day for the crude bulls out there, listeners. It's a day where it seems like the bears have the bit in their teeth and they're running away with it. Let's see if we can run away with a little bit of your feedback. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's dive into some of your feedback. Sean, a lot of interesting feedback. Let's start off with short and sweet here, coming from Anne Maria. She just said on our last show, which was negative rates, equity rallies, and crude kerfuffles, she just chimed in and said she loved it. Well, thank you, Anne Maria. We love your feedback. We love all of you out there who are enjoying the show, regardless of platform. A lot more of you are enjoying it on the YouTube, so we'll keep putting it out there, even though just about every episode we post there has some sort of copyright issue with it. We have to deal with it every time. We have licenses to all the music we use, yet somehow that's still an issue with YouTube. It's very annoying, but hey, we'll do it for you, Anne Maria, and everyone else out there who's enjoying getting the show in that capacity. Next up, let's go, Sean. Once again, Recon on the brain. Let's go to LT3. Maybe he's Lieutenant 3. Either way, he wants to know, how is Recon shaping up from a volume perspective? Will this be a historic year? Well, obviously, Sean, we haven't seen the big numbers yet. That's still yet to come. But you have any indicators so far of what people are expecting behind the scenes, Sean, you want to share with LT3 and the rest of our listeners?
Well, I would have to say, due to the volatile markets we have been seeing this year, that I anticipate record volume around this rebalancing due to some big changes within our U.S. equity markets and representation in our indices with so many projected additions and deletions that I expect record volume. So great question from LT3. LT3, Lieutenant 3, is that what you thought? I'm always trying to get into these acronyms, but it's going to be very exciting. And June 26th, we have topped that record the last 4 years in a row. But with the volatility and the shifts in the markets that have been happening, I'm anticipating record volume, and I think the market is anticipating record volume. But again, this all happens on the closing bell within the closing cross at NASDAQ, and that mechanism is fantastic. And we do the same at New York Stock Exchange. So this is a rather very, very exciting moment in time at the bell to see these numbers cross and transact. It's actually very exciting. And the NASDAQ is going to be having a virtual closing ceremony. So again, this is all going to be really interesting this year.
It will be indeed. So stay tuned. We'll get you your dates in a little bit for what to look for next. Speaking of next up, we got back O $. They want to know, why is OIV no longer an active ticker? You discussed it on the show, and I found it to be a useful indicator for crude oil volatility. Well, that's because it is, or at least it was, their back O $. OIV, of course, listeners, was the VIX of the WTI contract. Yes, there are VIXs on more than just the S&P. You don't hear about them too often, but they are. And they're useful gauges for a quick snapshot of what's going on. It's VIX, so it's pretty much front month at the money implied. You got a little bit else baked in there. You got a little bit of SKEW. You got a little bit of the near-term weeklies baked in there. But effectively, it's front month at the money implied out there. So that's what it's giving you. And that's what it was giving you on the WTI contract. Of course, what happened to that front month WTI contract, listeners, not too long ago? It went negative. And guess what? What these models are not really designed to price into and take account for. Of course, negative pricing out there. So that pretty much broke things out there in OIV. I believe it halted back as soon as that contract went negative. And it is, as of now, still halted around the 200-plus level where it kind of shut down last time out there. So unfortunately, yeah, it's halted. I really don't know why it is still halted. Obviously, crude is no longer negative. They should be able to disseminate that. Maybe that just broke them literally. They can't handle it anymore. It was too shocking of a development for them to bring it back. Either way, as of right now, unfortunately out there, everyone who likes this type of thing, unfortunately, we are seeing that OIV still halted. So there are other things you could do. Obviously, you can go pull up the TWIFO report for yourself and pull up front month at the money crude to see exactly what's going on for yourself. Could be energy, could be whatever you're looking at out there. You got to do a little bit of legwork then to find it yourselves. I'm trying to find some of this data for you myself right now, listeners, and things are not playing ball with me because things are so insane out there in the markets right now that it's really slowing everything up. There we go. All right, this looks a little better. Before, when I was doing some of those metrics, listeners, it was showing me, for some reason, dates of May 18th through May 22nd all of a sudden. So a little bit of a glitch in the system there. It seems to have worked itself out now. Obviously, these are insane markets, so maybe a little bit of that to be expected. So get you a little bit of some updated metrics, like BIGDOGG wants to know, is S&P SKEW showing a strong inclination for hedging at these new all-time highs? Loving the network, long-time listener. Well, thank you for that, BIGDOGG. Keep the love coming. Keep listening wherever you listen. If you like what you hear, put a review out there. Now I'm a little bit happier about these stats, listeners. I was a little bit concerned when they were showing me dates in May. It didn't seem like it made sense. It didn't seem like it could be right, but I wanted to make sure. So now we got the right dates being disseminated out there. And looking at S&P SKEW, let's go out there right now. The E-mini S&P is obviously off about 5.5%. Let's see here. Look at the SKEW. The big contract's going to be in the weeklies, listeners. That's still the case with the 1 day to go contract doing 26, almost 27% of E-mini paper. Today's a weird aberration. We're seeing a massive sell-off. So unfortunately, it's going to skew, pun intended, those numbers a little bit today right now. So let's go out a little bit. Let's go out a whopping 7 days. Let's go out to the June contract. That has about 24% of the paper out there today. And let's look at the SKEW. Last week, the puts were 16.5% rich. The at-the-money this week, they're about 15%, 14.7%. So the puts have actually come in a little bit. Let's see. The calls were 12.1% cheap this week, 7.6% cheap. That might surprise you. A, this is the contract with about 1 week to go, so take those SKEW numbers with a big grain of salt. But B, sometimes as you move down the SKEW chart a little bit, usually not right now because this is a very aggressive move, so usually we see the vol pop. But if you sell off and then maybe hover around those levels for a little bit, you might see exactly what we're seeing, which is the put wing actually coming in a little bit. It takes a lot of aggressive movement to really make you deviate from the SKEW chart and get really aggressive on the vol front. Sometimes if you move down that SKEW chart a little bit, you're going to see where you're moving to, that vol actually come in. That's in a quiet, tranquil market, and if it happens aggressively like it happens today, usually you don't see that, but again, these are somewhat unprecedented times out there. So right now, actually, in the most active contracts, it seems like people are taking some puts off here, LT3, which is not surprising. They probably were hedging going into these big all-time highs. We've certainly been advocating for that. We were hitting new all-time highs, 10,000 in the NASDAQ, crazy levels. So I'm not surprised that people would be taking some puts on and probably be taking some of those off right now as well. So yeah, unfortunately you asked us on a day when the world is on fire, and so it's kind of hard to parse SKEW because the horse has kind of already left the barn. But yeah, about a week ago we saw a little bit more bid for the puts. So there were definitely people lining up for the puts last week, which is, again, not surprising. We were approaching new levels in the S&P. So when you see that, you're going to see some crazy action here. May, Sean, another one for you here from, people got recon the brain. May wants to know, with the crazy markets and everything unexpected going on in the world, why don't you reconstitute the index? I'm assuming she means the Russell 2000. But maybe she wants Russell 1000. Who knows? Why don't you reconstitute the index more than once a year, Sean? Why do you stick to this rigid schedule when the world is on fire, sir?
That's a great question. And there's a lot of thought that has gone into why we reconstitute our products once a year. And it's, for one thing, it's from a cost basis, it's from a transactional perspective, it's kind of expensive. Number two, we think our methodology has worked, and we talk to our clients all the time in regards to methodology and how we calculate our indices, and also the methodology into reconstitution. And we are really driven by what our investors want and what the market wants. And it has worked so well on an annual basis that it is definitely the methodology that we're going forward with. But we always listen to our clients to see what they think would be optimal for the methodology and the recalculation of our indices. So great question. And if you look globally, we have different methodologies around the world, and some indices are reconstituted more than once a year. So there's client demand for both, and we support annual and additional reconstitutions more than once on an annual basis with some of our other FTSE indices. So it's a methodology that works, and we have an investor base and a client base that is very happy with the methodology that we have in place. So that's the true reason why we reconstitute once a year.
All right. Since we're getting so many, I'll allow one more on the recon here, Sean. People have recon on the brain. This last one comes from Mar1022, Mar1022. Any expectations for the markets once the recon happens? Interesting question. We know it mostly takes place kind of in the after hours, but still, Sean, any thoughts from Mar here about any expectations going forward around this most crazy and tumultuous of recon, sir?
There's always the question, does recon cause volatility as it happens, or what do you do during really volatile times? And again, the methodology that we have in place to have this transaction happen on the closing bell on Friday, June 26th, kind of takes the vol of that transaction out and makes it just a really fantastic, seamless transaction from the indices to the reconstituted indices. So when the markets open on Monday, June 29th, you've got Russell 1000 and 2000 trading, and those lists will be published Monday, June 29th, when the reconstitution takes effect. And those reconstituted indexes will begin to operate. Again, we don't forecast volatility, but markets are going to be volatile when they're volatile like they are today. So we don't forecast that. But the fact that we have this transaction on the close on the 26th eliminates that volatile scenario from happening with this transaction every year.
All right, Sean. Unfortunately, that music means we come to the end of Recon Question Palooza, a.k.a. TWIFO, this week. You guys have a lot of questions about a lot of topics, a lot of things popping off this week. It's a crazy day, crazy time. We get it. Keep those questions coming. If we can't fit them all into this show, we'll get them into other shows. We're doing our ablest to answer your questions. Boot camp questions this week. We did option block questions this week. We did OPR, I believe. Everyone's answering questions, so we'll answer more on vol views tomorrow. So keep those coming. We love to hear from you guys. Sean, you kind of mentioned it earlier. People obviously have it on the brain, so hit us again with those dates for what the heck we can expect for all things recon in the coming weeks.
Well, we still have a couple of weeks of still working on these indices, and our index team are working tremendously hard. That's for the next couple of weeks. And then June 26th, we have the reconstitution at the closing bell. And Monday, June 29th, we open with the new indices. So interesting times coming. It's all very exciting. There's actually a nice article that we put out on June 5th about FTSE Russell beginning the 32nd annual recon. And I actually sent you the link, Mark, to you and Gene. So feel free to forward that out. It's got a link to our recon website where you can get fantastic information on the FTSE Russell website. You can also reach out to me at smith@FTSERussell.com. I'm happy to answer any and all of your questions in regards to recon. But we have some really exciting times coming in the next couple of weeks, and really looking forward to just a fantastic recon. And again, feel free to tweet or send out this link that I just sent you. So again, anybody has any questions, you now know how to find me.
There you go. smith@FTSERussell.com. You guys got all these recon questions on the brain. Hit them up. the man explain it to you in more detail. FTSE Russell, FTSERussell.com, the place to go. For those reports, we'll tweet out the link and share it for all of you guys out there who follow us as well. You guys know where to go to find CME, just CMEgroup.com. You want all that data, CMEgroup.com/TWIFO. Like I mentioned, looks like sometimes all this craziness right now might be updating a little bit slowly. So if you're doing those TWIFO reports, make sure you keep an eye on the date range it's showing you up there on the top, just to make sure everything is rolling along for you out there. But it should be working on a day that isn't completely insane like we're seeing right now. If you have more questions about what's cooking over there with the pits and everything, and electronic trading, negative options, all that fun stuff, CMEgroup.com, the place to go, /TWIO or /TWIFO, generate the reports for yourself. On behalf of Sean and Derek and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for sending in questions, for listening live, all the fun stuff that you do. Keep it coming. And we'll see you back here tomorrow for Volatility Views, 1 p.m. Central, 2 p.m. Eastern. And then on Monday again, we kick it off the whole week with the option block. And we're right back again here on Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.